Well, ladies and gentlemen, welcome to Development Discourse, where we ideate for Africa's development. My name is Patrick Okigbo. I'm a partner at Nextier. Nextier is a multi-competency advisory firm that's focused on helping Africa solve its most complex development challenges. How do we plan for Africa's development without examining the strength and inclusiveness of its financial systems? Robust, transparent, and inclusive financial markets have become critical to unlocking long-term investment and development as the continent continues to seek pathways to prosperity amid declining aid and fiscal pressures. Yet, across much of Africa, financial markets remain shallow, fragmented, and constrained by weak regulatory capacity, limited institutional participation, and governance challenges. My guest today recently published an important book on this subject. The book, All Hands on Deck, Unleash Prosperity Through World-Class Capital Markets, argues for a bold rethinking of of how Africa mobilizes and allocates capital. The author and my guest today, Dr. Arunma Oteh, former treasurer of the World Bank and a leading voice in global finance, calls for bold rethinking of how Africa mobilizes and allocates capital, drawing from her decades of experience across regulatory, institutional, and global financial ecosystems. She offers practical frameworks for building trust, governance, and collaboration in the capital markets. I'm excited to have this discussion with her. Dr. Oteh is an officer of the Order of the Niger, one of Nigeria's highest awards, and she's a distinguished economist, finance, and development expert with over 3 decades of experience, including serving as the treasurer of the World Bank, as CEO of Nigeria's Securities and Exchange Commission, and we'll get into some of that conversation today, as a senior executive at the African Development Bank. Her expertise spans managing large investment portfolios, pioneering sustainable financial solutions, and leading global financial institutions. She's an executive in residence and a member of the Global Leadership Council at the Said Business School at University of Oxford. She recently founded the Oxford Global Think Tank, focused on fostering research and open dialogue. Dr. Oteh, welcome to Development Discourse.
Thank you very much, Patrick, for your really kind introduction and also for the opportunity to have this conversation with you. Your track record is also very well known in terms of the work that you've done for our country, Nigeria, for other countries in Africa. And I've really enjoyed listening to the conversations of Development Discourse. I think more than ever before, we need to have these conversations as to how the continent should really be in the driver's seat for things that affect the continent. So thank you very much for the opportunity to have a conversation with you.
And thank you.
And thanks to your audience for wanting to listen to us have this chat.
Exactly. And thanks for the compliments. I mean, you've spent decades in the trenches of the Africa capital markets, first as an investment banker, continent-wide development finance, and then as a regulator. And also at the World Bank before going back to academia, and now as a knowledge entrepreneur, with the think tank. What drove you at this point, to write this very important book? What is it that you saw or that you saw that wasn't being said in our conversations around capital markets in Africa?
Wow. You said you have only 1.5 hours, and this question, I could spend an entire day answering it. For me, it's a lot of things. First of all, the starting point for me is we have a wealthy continent, the continent of Africa. And there is no reason why it should also be the poorest continent, or its people should be the poorest continent. So I ask myself, and my father always said to us, to whom much is given, much is expected, what can I bring to the conversations around how we can do things differently. And as you said, I've spent my entire life, literally, in finance, and I hope we can get, we can get to the point where I explain what for me is the origin, because I started as an 8-year-old learning about the capital markets. But first of all, the needs of the continent are huge. Um, if you just take data from the African Development Bank, for us to meet the SDGs, we need $1.3 trillion per year. For us to have what is transformative economic growth on the continent, we need more than $800 billion per year. For us to address the infrastructure deficit, we need about $170 billion. I know you do work in the power sector. Just to meet the SDG 7, which is universal access to power, we need $64 billion. So first of all, we need huge sums of money to be able to solve the problems of the continent, or to meet and address and unleash the potential of the continent is the way that I would normally put it. So that's one. Second, what the capital market offers is a meritocracy. Money walks when things are not, going well. Money gets given to the things that are doing the right things. So part of what we need to also address is some of the governance issues. And I do believe that capital markets provide that pathway so that the right things get funded. I wish, for example, that the Nigerian oil and gas company, NNPC, the almighty NNPC, can go to the capital markets, so that we don't continue to see in the pages of newspapers some of the governance things, or read about them. Because what capital markets do is provide that framework, because there are others independent of those directly involved who participate in analyzing institutions. So there are rating agencies, there are lawyers, there are accountants, and of course, the average person who's invested in that company also does have a stake. So I talk about the huge finance requirement, but I also talk about beyond finance, some of the discipline that capital markets provide, which I think continent-wide we need. The other thing, that when you open the conversation, you talked about inclusive approaches. I was intentional in titling my book "All Hands on Deck," because I feel that that is one area where everybody can participate. I talked about being an 8-year-old and being introduced to finance. I have my late parents were not finance experts. My mother was a nurse, my father was an engineer, and they worked in the civil service, and they complemented their income by investing in the Nigerian stock market. They bought, and as I said, they were not experts. They bought Nestle shares, they bought Unilever shares, and were able to pay for my education through the dividends.
Value stocks.
Yes, through capital gains. So I start with the fact that as an individual, you can complement your income, you can create wealth, but you can also participate in building prosperity for the continent by being an investor. I talk about the fact that businesses, will be able to raise capital to expand, for new initiatives. New companies can come on board if you have a thriving capital market. I talk about the fact that the government has a role of policymaker, of regulator, but also of an issuer. I mean, if we can truly raise the capital that we need to solve, the infrastructure deficit on the continent. I think it was FSD Africa that said there's $2.4 trillion of domestic institutional money, not doing very much. I think some of it is in time deposits, some of it is in treasuries. And all of this can be patient capital that can be deployed to try and solve the continent's problems. So it was really my own call to action, my manifesto of what we could do, but recognizing that it's an inclusive approach, and that there are practical things that one can do. And from my experience, having been in various, on various sides of the coin in terms of the capital markets.
By the way, I must thank you for the way you wrote the book, right? Because it's one of these books that anybody, irrespective of, whether you have a background in finance or economics, you can read it and totally understand it and, get to the heart of it. So thank you very much. I know it's not
Oh, but I
an
have to
easy
say
thing.
thank you to you because it was intentionally written that way. Because every time you mention finance, even when I deal with my friends, oh my God, oh, those are things that, only people who know maths,
Exactly.
do. And I'm like, no, this is something. I mean, finance is life. Finance
Yep.
teaches you about planning, which is what budgeting is, about saving, about investing.
Mm-hmm.
And that's how you manage your life. So that's
Mm-hmm.
why I went about telling the story more as a personal story, but also talking about leadership, the leadership it takes to be in any particular role. So I'm glad that that's the observation that you made. And a few others have said the same thing to me. I thought I need a book that is accessible. I don't want to
Yeah.
write a book that only people like you, who are gurus will understand. I wanted the average person on the street to understand it. And I also wanted to speak to people like you because I also think that, I mean, if I was advising the president of any country today, I would say financial capability is key.
Mm-hmm.
Investing in financial literacy. Of
Mm-hmm.
course, the other one that I like is, making everybody digitally literate. And I don't know if it's because I've been a finance person and I have a degree in computer science. I don't know, but it's probably more than that. I know what those two skills can do
Mm-hmm.
in accelerating individual capability, but also in accelerating the capability of a nation to kind of, realize its potential. So.
So help my grandmother, understand this point, right? Why do we need capital markets? And I know you've talked about it, but just help her understand why we need capital markets. What's the causal pathway, between capital markets and Africa's development? And maybe to tag on one more question to the back of it, what are just those absolute non-negotiable foundations, that African markets must get right, for it to lead to that development that we're looking for?
So you're going to score me after I do. I'll do the grandmother bit, and then I now talk about the foundational issues. So first of all, you use the term market,
Mhm.
and every one of us understands what it means, to go to the market. You have a buyer and you have a seller.
Mhm.
And so, if you're investing, you're in a sense, the person who's buying. And
Mhm.
if you're selling securities, or if you're issuing, if you're getting money, you're the one who's selling. So I
Mhm.
think the first thing is that it's a marketplace that brings together people who have resources, that the extra resources that they want to put away with those who need the resources. And
Mhm.
it's an organized place with rules. Um, and one of the things I always also share, or I often share, is that um, because I talk about the importance of trust in markets.
Yep.
Um,
Mhm.
if you know that if you give me $10 today, and that I will not return it tomorrow based on your past experience. You will not give me, except if you want to kind of give me a gift and throw the money away. You wouldn't give me
Exactly.
back and return the money. So
Yeah.
part of what having an organized market is one that allows you to give money away for long periods of time. So if you look at the financial sector as an ecosystem, you start with the banking sector where you put your money away and then you go back and get your money. Then you now go to the next sector, which is what I would consider, taking a loan or giving a loan, or if you're an investor, investing in a bond. So you go back after a few years, after a year, after 2 years, after 5 years, after 10 years to go and get your money back. Or,
Mhm.
you invest in a piece of a company, which is what you call equities. And in that regard, you would participate only in a benefit if there's profit to share, if there is money set aside to give the owners of the company, but you own a piece of that company. So it's a
Mhm.
little bit more risk because if things are not going well for that company, then you won't be able to get, you won't be able to get a profit. You won't be able to participate in a profit through a dividend.
Sure.
So that whole hierarchy of risk, you put your money in the bank, and it's like, I can't remember which is that parable where the person buried their money on, underground, and all they
Yeah,
got was that
yeah,
money.
yeah, yeah.
Then the next level is that you invest in bonds, which are a little bit risky, or
Mm-hmm.
that you take a stake in a company and that company could go under. So that's the way that I would describe it to our grandmothers
Mm-hmm.
as to what this market is. It's an organized marketplace where there are
Mm-hmm.
rules, where there are other, there's a regulator, the apex regulator that is government that kind of regulates the market. There are other participants. The other thing, of course, that I'd love to always talk about is that you can always, you may invest in this company, but you may want to get your money back sooner than when the company is closing. So you
Mm-hmm.
can go to the market, which is called the secondary market, and then get your money back. What are the
Mm-hmm.
foundational things that you have to have?
Exactly. Mm-hmm.
Trust. And that's why I made the point that if you know that if you give me your money, lend me your money, and I won't return it, why would you give it to me? Except if you just want to, give me a gift.
Mm-hmm.
But then you'll give me a gift. You won't be loaning me money. So trust is fundamental. A market that engenders trust is number one. And
Mm-hmm.
one of the reasons, for example, the US markets are considered the most reasonably priced markets is that it engenders trust because they have a series of systems. They have a strong enforcement regime which if you don't, if you do wrong, you will be brought to book. And some of what, when my colleagues and I were at the SEC in Nigeria, some of what we tried to do was restore that confidence in the market so that the ordinary investor can feel that they can get their money back
Exactly.
when they invest in the market. So that's number one. The second is to have what I would consider a market that is sizable, that is deep, that has breadth, so that you can get out of it when you want to. So a market that is liquid. And some of the larger markets, the US markets, the UK markets, are much more liquid than some of the smaller markets.
Mm-hmm.
That's very important because that's part of what's nice about it because you can invest today. But if you want your money for something, you can go on the secondary market and get it. So that's also important. So I've talked about trust, I've talked about
Trust. Liquidity.
liquidity.
Mm-hmm.
The second is having a variety of products and a level of sophistication. So that, as I said, if your investment profile is such that you want to make sure that your income is guaranteed, then you may want to invest in a bond. If you're a younger person and you want to take a bit more risk, then you want to invest in equity. So having a variety of instruments is also extremely important. Another one is just being able to manage the risks that you face. Some of our markets in Africa are not quite there, where you have risk management instruments that allow you to protect yourself. Again, so you may decide, okay, if the price of a stock or if the price of a bond gets to a particular level, I'm comfortable. If it goes beyond that, I want to make sure that I don't, I don't get into trouble because it may go the other way. So you buy another instrument to protect you from that. So having risk management instruments also is extremely important. And of course, having several participants. So having, good structure where the government truly plays its role as the apex regulator, having a marketplace, an organized marketplace like exchanges, also important, and then having a variety of market participants. So those would be the things that are for me that come to mind as fundamentally important for you to have a market that is thriving.
And when I listen to everything you've said and how you also explain them in the book, it appears to me that maybe the key factor is like leadership, and it's leadership that drives the rest of it. Do you kind of agree with that point?
So I think you want me to talk about my leadership philosophy. I really do feel that, whether it's in whatever role you are in, even if it's leading a family, that you have to, that the binding constraint is leadership. You can
Mm-hmm.
inspire people to be their best selves if you're a leader. But
Mm-hmm.
when you're in a role where you're looking at the economy as a whole, even more important because there's so many players. So
Exactly.
for me, leadership is the binding constraint. And
Mm.
I think it's something, that, I don't know how God will help us, but I think we need to do much more with on the continent. I talk in the book about my leadership philosophy really being grounded on my own values as taught by my parents, but also me watching others um, live those principles. And one person that I talk about, and I know it's a cliche because everybody in the world talks about him, is about President Nelson Mandela. And I talk
Mm-hmm.
about the 4C leader, a leader who has character. And I'm always reminded of what Warren Buffett said. He had three things, and I think one was competence. I forgot what the other was, and the other was integrity. And he said, if you don't have integrity, then the others don't matter.
Yeah.
So for me, you start with character. As a leader, compassion for me is also extremely important because a leader essentially realizes that what they do impacts others. So compassion for me includes empathy. It includes, the reason I consider Mandela the consummate, iconic 4C leader is that, he's, you know, I don't know many people who would go to jail for 27 years and come out and forgive everybody. So forgiveness, just putting the other person's situation in mind as you do things. And if we had more leaders on the continent that really thought about their people, or, the senior executive who's thinking about the impact of their business on his team, but also on society, then we'll have we'll do much better. Of
Yeah.
course, competence for me is key. I think that people should make sure that they're most prepared to do a job and they continue to invest in themselves so that they can do the job right. I do think that because, particularly in our environment in Africa, where there's, most leaders are put in positions where they need to do things that are transformative or that are different, that a leader needs to exercise courage. Because oftentimes you're the one that starts and then people follow. And if you don't have the
Mm-hmm.
courage to start, to take a path that is, excuse me, a path that is not the normal path, then it's hard for you to do.
For your followers.
Yes, for your
Mm-hmm.
followers. It's also hard for you to to um to to create change where it is necessary. Yeah.
Mm-hmm.
So for me, leadership is also quite important. And
Yeah.
if we're, I mean, our nations have existed in one form or the other. I mean, people say, life started on the continent of Africa, but for all of us, who are in these positions that we're in, we should ask ourselves, why would in our lifetimes our society be this way and we don't do anything about it? So that's why I said,
Exactly.
that we're all called to lead in certain
Mm.
ways because of all that's been given to us. And in a sense, you're leading in, in bringing people to have conversations that can transform the continent. And but I hope that we'll do more than just talk. That that we
Yeah.
can all be
Eh,
doing a bit more.
Fantastic. Now, let me maybe get one more question in on this building block for the market before we move on to other things. So if you look at Africa, many of our businesses, small to medium scale, family owned, owner operator, etc. How do we convince these Africans, to give up control? Because listing in the market entails giving up some control. How do we convince them? Because we need that to increase the number of listings, but also to, even on the flip side, increase liquidity, which is one of the points that you raised.
Mm.
From a very practical point of view, how have you thought of this, and what are some ideas?
So my first point on it is that you can own 100% of $100, or you can own 10% of $1 million. And my
Exactly.
choice is to own 10% of $1 million. And when I've
Exactly.
spoken to entrepreneurs, often, that's the example I've given. So the starting point is to explain the benefit of ceding control, because when you cede control, you bring in other partners, you bring in knowledge, and a lot of a lot of those who get involved in businesses who are not the original founders bring something. In fact, the guidance is that if you're looking at partners, don't just look at the money that they bring, look at also the other value that they bring. They may bring you access to markets, they may bring you operational knowledge. They may bring you diversity of products. So for me, so that's where I start in when I discuss with entrepreneurs about thinking about what they will do in growing their businesses. The second is for me an example that I actually give personally. So, I often I've shared this with in my teaching at Side Business School, which is that I come from a family that's very entrepreneurial. And my late uncle, the patriarch of the family, had founded businesses in the 40s. He was in There was a conglomerate of things, manufacturing, dealerships, and he wasn't educated, but I don't know how he made this contact. Nothing of that business exists today.
Exactly.
And part of it is that when you don't bring in professional managers to institutionalize your business, those structures don't get created that then allow you to have a legacy that outlasts you. So that's the second point I
Exactly.
make to entrepreneurs. But also, we have so many examples. I mean, if Mark Zuckerberg was thinking about, his little business in his dorm room, we would not have Facebook have the kind of impact it's had around the world. So the potential for you to raise money, to bring in knowledge, to grow your product beyond whatever boundaries you thought about is absolutely significant. And there will be a time when you would want to retire. There will be a time, where, you want to look back and say, wow, this idea that I had has flourished to this
Mm-hmm.
point. So I don't know the case for wanting to hold on to everything and having a
Yeah.
small business. I don't
Yeah.
understand it. And when I've made the cases, it's been compelling. But what I will say though is that we need the kind of ecosystems that you have in other parts of the world, because some of the concerns of entrepreneurs about sitting control, some of it is valid. Some of them have been burnt, where people have actually stolen their businesses. So you need a
Mm-hmm.
legal framework that provides protection that is implemented, because we have most of that legal framework all over Africa. But we need
Mm-hmm.
to be able to have laws that are enforceable. So the legal framework is extremely important. We also need to make it easy, and I'm trying to think of the right way to say this, and maybe you can help me, for people to fail. So one of the
Mm.
challenges that we have on the continent of Africa is that a lot of businesses are worrying about failure in the way that the American counterparts are not worrying about, because there's just so many
Exactly.
sources of money. And it's not, in fact, you probably, get, if you fail before in the US, and I'm exaggerating to make the
Yep. You have
point.
a premium.
Yes, while, on the continent in most places, and I'm being stereotypical to make the point, you're trying hard not to fail.
Exactly.
So you're much more risk averse. You're worrying about if somebody else gets involved, they may not, protect my business in that same way. So we need to make sure that there are enough sources of funding, that there's a whole ecosystem, and you're familiar with, all the fundraising that has happened with some of the unicorns on the
Mm-hmm.
continent, like Flutterwave, where they've done
Mm-hmm.
Series A, Series B, Series C, and hopefully they're looking at going to the capital markets to fund. We don't
Mm-hmm.
have that on our continent. In fact, when you
Yeah.
look at some of the unicorns, a lot of the funding came from the United States that
In
has
fact, I have a
supported.
question. Yeah, it's a question I wanted to pose to you because I see that many of the unicorns, many of the tech guys are listing in New York, London, etc. What does that what does that do to the market that we're trying to build? What's your view on that? Is it another form of brain drain, capital drain? Is that something that we should have been doing to enable them to raise capital locally instead of having to list in those markets?
It's a multifaceted issue. First, I'm very proud of them that they're listing in markets globally, because some of those markets are deeper. They have a wider access to a variety of investors. But we also have to have the opportunity for them, create the opportunity and the environment for them to list at home. And a lot of companies have, the opportunity to dual list. They can list at home and list abroad. So if you look at the Seplat Energy, very
Yes.
interesting. They listed both on the Nigerian Stock Exchange and on the London Stock Exchange. They listed on the London Stock Exchange so that they could showcase that they would comply with the highest levels of corporate governance. But they listed in their home exchange because there's also something about an affinity, to an entity that is listed in your home exchange. So our exchanges, the marketplaces, the market infrastructure needs to be places where that can attract issuers to list. But I also welcome the fact that some of our entities are listing globally. It's also a way for people to understand what Africa has to offer. In a variety of ways. I mean, the
Yeah.
Anglo-Americans, started it way back. People even forget today that Anglo-American is a South African company. And often people say, oh, I've had to say to somebody, no, it's actually a South African company that's listed, on the London Stock Exchange and all of that. So my advocacy is for both, but from places to be such that they attract us. But the point I was making was about even pre-listing, that in a sense, a lot of the American investors are seeing the value in our companies that some of our domestic investors are not seeing. Isn't that interesting? That a lot of our unicorns, the pay stacks, the Flutterwaves of the world, that they actually, the listings, that the American, private equity firms and venture capitalists invested in them way before some of our institutional money started thinking about them.
Yeah. Interesting. And again, I want to go back to the book and, how you wrote a lot about trust, trust in the market and just building trust that enables the market to grow. And that brings me to that episode in your career when you were at SEC and where you faced intense political pressures and the dramatic confrontation with the Nigeria House of Representatives. In fact, I told my folks that we should use that picture of you in the House of Reps on the flyer for this event. They overruled me, but every time I think about you, that's the picture I see. And my question is, what did that experience teach you about the political economy of financial regulations in Africa, but even more broadly about driving reforms, in Africa? What you've had time to reflect on it. What's your takeaway from that episode?
Yeah. So first of all, I don't even know where to start. I always share that President Yaradua, who appointed me, and I had conversations about me joining his cabinet, and I didn't make it. And when the opportunity to become the head of SEC came, I heard that he actually said, "Where is that woman that has, been living abroad for 20 something years and doesn't know anybody? Because we need somebody who doesn't know anybody to come and clean up the market." So, credit to him for that choice. And I was like a bit hesitant. I'm like, okay, he couldn't make me minister. Now he wants me to head this agency. And my sister, and I talk about it actually in the book, my sister was on her knees praying that I would get a role where I could focus on, that wouldn't have all the politics in it, and that I would focus on the capital markets. I've had a career around the world in the capital markets. I actually started my career in the capital markets in Nigeria. And so I made the choice for a non-political role. And so nothing prepared me for the experience that I had um, in terms of the interesting time that I had with the House of Reps, particularly the Capital Markets Committee of the House of Reps. But I've had, as you said, a long time to reflect. It's been 10 years since I left the role as the head of SEC Nigeria. And for me, I always say to people, I would do it again, is the way that I say, because people say, oh, I'm sure you'll never do it again. I'll do it again, but I'll be interviewing the president, interviewing everybody. I will, I would have, I'd have, all the commitments made by every arm of government. That's a joke. In reality, I would do it again because people want leaders to do the right thing.
Mm,
The kind of support that I had during my time as the head of SEC Nigeria from the ordinary Nigerian, from different stakeholders who supported me, I would never have imagined that I would have that support. People want their governments to work. People, when they see you're doing the right thing, they'll provide you the necessary support. So that for me was lesson number one around
mm,
the fact that everybody wants things to work. Um, and they like leaders who will take the risks that are necessary to make sure that those things work. And by the way, even some of the people who were on the other side attacking me have become, have kind of said, oh, we now understand what you were trying to do. Now our
mm,
markets are safer. We really appreciate. Some have even apologized for
mhm,
the stance that they took. So for me, it's, when I look back, I'm happy to be able to have done my own bit. I'm happy to have withstood some of the challenges that my team and I faced. Some of what helped me was also that I had some dedicated staff at the SEC Nigeria staff. A lot of them were staff that were already in the organization who are passionate about the capital markets, who are passionate about the right thing being done, who were very happy to have somebody who could provide leadership so that the SEC could play its role. Before I joined, people were not even aware that the SEC was the apex regulator. In many cases, they
exactly.
thought they reported to the Nigerian Stock Exchange. So when we started implementing our agenda, um, both the staff, the market participants, the ordinary person now thought, oh, okay, this is interesting. There was series to it. The first part was the SEC had actually prepared an agenda, which I followed, which is the SEC said we want to build a world-class capital market, and a world-class capital market is one that people trust, because they will not lose their money because somebody's defrauding them of their money. They may lose their money because of an investment decision. They wanted one that had multiple products. They wanted one, where if people did wrong, the cost of doing wrong was higher than the cost of doing right. So we were, I went to the IG of police at the time, MD Abubakar, who was very gracious, phenomenal Inspector General of Police, who seconded police officers to the SEC who worked with us. So when we went to go and intervene in terms of people who were doing wrong, we had more teeth. So people truly knew.
mm,
When people said there was a new sheriff in town, people knew there was a new sheriff in town. We partnered with the Attorney General's office, the Department of Public Prosecutions. There are a number of things that are particularly nice about the Nigerian capital market regulatory system that others could learn from. So there is an investment securities tribunal, which is where the first I don't know the language, the first court that you go to if you have any
mhm,
case related to issues related to investments or securities. That saves you time than going to the regular courts. And
mhm,
that's something others, have learned from us. So I think, so for me, the summary is that people want leaders to do the right thing. People will follow you if you show the right leadership. And by the way, I always say to people, maybe it was easier for us because people know what it means to lose their money. So if somebody's coming to come and help them get their money back, I mean, when I arrived, the markets had declined by 70%. You know, by
Exactly.
the time I left,
2008. Yeah.
yes, by the time I
Hmm.
left, we had, the market had grown significantly, but we had
Hmm.
also broadened the products because, the one of the challenges we had in Nigeria was the whole system of increasing the capital of banks was what made it seem like the Nigerian Stock Exchange just focused on the banking sector. There were a number of other sectors that then got the exchange not quite there even till today represented more this the sectoral distribution of the country than being a banking stock. At that time, it seemed as if it was just a banking stock. We introduced bonds for corporate, so it wasn't just bonds for done by the government.
Hmm.
We were able to separate one of the other things that was happening is that there wasn't a separation between who held a security and who traded in the
Hmm.
security. In most markets, outside of the continent, that would be normal. Custody is different, from
Hmm.
trading. So there were a number of rules that we put in place. But I'm also most proud of some of the things that were introduced that were very, focused on Nigeria. So we gave a license to FMDQ, and I'm extremely proud of that because that was an example that the entire world then focused on emulating. And the reason it was an example was not because of the regulator, it was because the Money Markets Association, the over-the-counter association, came to the SEC and said, "We understand the value of regulation, and we would like you to regulate us," and sought a license. And as a result of that, we now have another full-scale exchange that is, significantly big, that trades in bonds, that trades in FX. We also give a license to another entity, the National Association of Securities Dealers, which basically trades in public stock that are not necessarily, listed on the Nigerian exchange. So to be able to have a full suite, we also gave, the commodity exchange, affects a license,
Hmm.
and I'm absolutely impressed with what FX has done, since they got the license. So it's having a market that has more scale, that has more liquidity, that has more breadth, that has more sophistication, but most importantly, that people can trust, that people will not lose their money because somebody has defrauded them of the money. So I think that's what we did. So I made. I mean, I don't know that I'll do it again, but to that question, will I go through what I went through to see
Mm.
that we have a market that is world class? Absolutely. We need leaders who will, take the risks necessary to try and
Mm.
unleash what I consider potential all across Africa.
No, that's fantastic. That's fantastic. One group you didn't mention as you were going through this last response was the pension funds.
Mm,
And we see a lot of pension reforms sweeping across Africa, creating billions in assets under management. But we don't see them investing, in my words, in the real assets, except in buying like government bonds, etc. What's the big issue, and how do we address it?
okay. So permit me to, I like to answer questions, but one of the things I think we need to give Nigeria credit for, and a number of other African countries, is the pension reforms. And
Okay.
President Obasanjo showed leadership. I mean, I think it was 2002 or whatever, when or 2004, I can't remember. But we had pension liabilities of $12 billion, as in minus $12 billion.
Yeah.
By the time I was leaving, there was $30 billion of pension money that we could invest.
Positive.
So you're
Yeah.
doing the second level question as to why is this money not working, doing more? Why is it not patient capital? But we
Hmm.
had a negative $12 billion. Sorry, it was 2004. And so to be able to put in place an ecosystem regulation, and by the way, under the leadership of some of the DGs of PENCOM, they now expanded it to the states, was for me significant.
Yeah.
Your point around these monies being used to invest in, um, um,
Government bonds.
yes, is a very important one. There are two things that are driving it. If you have an inverted yield curve, I mean, if it's easier for you to put your money in 1 year treasuries and you make higher interest, it's rational behavior you would do that. So part
Yeah.
of it is just the macroeconomic environment, where, we need to focus on macroeconomic stability in the way that the current central bank governor is, you know, doing, even though it's painful for all of us to see the
Hmm.
high interest rates, but you need to control inflation. You need to make sure that the curve is normal, that if you have, in the longer term, you'll earn more versus in the shorter term. The second is, of course, we do need the skills. There's a lot of innovation that you can use to protect yourself in investing in the longer term. We have seen some of that happening. We've seen a number of infrastructure funds like ARM, Harith, a number of that. So you need to create the products that would allow these pension funds feel comfortable because, as you know, it's also pension money. So they need to be
Hmm.
careful that when the pensioners need the money, that those monies are available. So it's a real, it's a macroeconomics, it's innovation, it's also just the skill base of those who are structuring the transaction. But your point about institutional money is very important. One of the things that I'm also very proud of that's happening across the continent is also the sovereign wealth funds. Having saving money for the rainy day, and Nigeria has been a great example. When I before I moved tonight in 2008, the President Yaradua had put together a team, which I was a part of, to think about um, what should we be focused on if we set up a sovereign wealth fund. And I don't know if there's any other country, but at that discussion, we agreed that the sovereign wealth fund, even though they're traditionally stability funds where you invest the money outside of the country, that you can't have the infrastructure deficit you have in Nigeria and then be investing all the money outside it. Some of it needs to be in infrastructure. And that's why there's always, I mean, the sovereign wealth fund was set in place, and it's always had this piece that focuses
Hmm.
on investing in infrastructure. And the leadership of the NSIA has been
Yeah.
has been phenomenal in that regard. So you need institutional money. The other aspect, of course, that we're not doing well in yet is insurance.
Hmm.
The percentage of insured value is so low on the continent versus other parts of the world. I think it's probably about 3% of value, because that's also what creates, provides institutional money. But that said, even what we have today is $2.4 trillion, and it's being
Hmm.
invested, some of it in low yielding government instruments outside of the continent. So we still have a lot of work to do. There's so many
Yeah.
parts to it. Um, you know.
And I'm glad that you touched on sovereign wealth funds. I know that Professor Patu Tommy is doing a book with some of us on, how to get sovereign wealth funds to invest more in the local market than just chasing returns in offshore markets. And we understand that the sovereign wealth funds need to make money, for the future, but there's a need to invest locally. I don't know, have you given some thought to maybe how to structure them differently to actually support domestic markets more,
Mm.
but in a protected way, or in a way that protects their returns? I don't know if you've given some thought to that.
Okay. No, no. So first of all, the reason that sovereign wealth funds invest outside of the market is that they were traditionally stabilization funds. So the idea is that you invest outside of the market so that you bring stability because the government is exposed to what's happening in country.
Hmm.
What has happened now with including with Nigeria is that you have several tranches. So you can have that stabilization bit, but you can also have the one that provides patient capital. Because by the way, if you're investing patient capital, you're bound to make more returns for future generations. So that's happening. And Nigeria is
Mm-hmm.
a good example. I mean, they have an infrastructure tranche that invests in Nigeria. So that's already happening. There needs to be much more of that. One of the challenges which Nigeria has overcome is that it's in its own scheme is that it's a collective scheme, where you have to agree, with the governors of the states in Nigeria
Yeah.
as to the modalities. So part of
Yeah.
it is advocacy and education um, um, around people understanding the value of sovereign wealth funds and the value of saving for the future. And by the way, Africa offers some of the highest rates of investment. So if anybody's
Exactly.
telling you that investing outside of Africa is a higher return on investment, that is often not correct.
Exactly.
Yes.
Mm-hmm.
So it's
Exactly.
about risk management, it's about people understanding the products. It's also about tranching. And I always explain tranching that, if I'm a 20-year-old, it's better to invest, to take a bit more risk,
Mm-hmm.
calculated risk, so that I can make higher returns in the future. If I'm an older person, it's better, not to take as much risk. And what
Mm-hmm.
you do with sovereign wealth funds by having those tranches is creating the opportunities for you to have different objectives for those tranches.
Mm-hmm. 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 Excellent.
But I'm
Maybe
glad to
just
hear about this book. I look forward to.
yeah, he's working on it as part of his fellowship with the Wilson Center,
Mhm.
and a number of us who are contributing chapters to the book. So, look out for it. But maybe one or two more questions before I take audience participation. And just to say to the participants, please type your questions in the Q&A tab, not in the chat room. You can have your conversations in the chat room, but please type the questions in the Q&A tab. I'll pick them from there and I'll post them and give attribution to you. But Arunma, there's all this talk about integrating African capital markets, harmonizing regulations, cross-listing, regional exchanges. Um, we've seen these initiatives, or you've also looked at them, I believe, quite closely. What actually works, and which part of it is just conference talk? What works in practice, and by extension, there are some African countries that may not have deep enough capital markets, like Liberia, where we work. What are the opportunities for listing in, say, Nigeria Stock Exchange, or Kenya or wherever else, to assist the companies in those countries?
Mhm. So first of all, it's a very important um, issue that you've raised, and there are many ways to think about it. First of all, companies can list. I mentioned the case of Seplat that listed both on the Nigerian Stock Exchange and the London Stock Exchange. ETI is domiciled, and EcoBank Transnational is domiciled in Togo, but it's listed on the Nigerian Stock Exchange. So people can list in whatever venue that they want to list
Mm-hmm.
in, that meets their objectives. And those objectives may be that you can actually use it as a way to enter a market. If your name is not well known in that market, you can actually use listing on the exchange as a way to bring visibility to your name. You could want to broaden your investor base. So there are many reasons why you could list. So the starting point is you can list on any exchange if you can meet the rules of that exchange. The second issue is around, which is a more an issue that is still work in progress for the continents, around how do you integrate our stock markets? And there are many ways to integrate our stock markets. One is to harmonize the rules, to harmonize the systems. And to So in East Africa, they've done a great job. They have passporting. You can trade from any venue, you can trade on any stock, you can list on any venue. I know that both the association, the African Association of Stock Exchanges, has been looking about at passporting across Africa. The West African regulators, have been looking at what they can do in that respect. But we have the example of BRVM, the Ivorian stock exchange, which for
Mhm.
many years, has been attracting listings from all over the West African Francophone zone. So we have examples, but pockets of example. What we need to do is do it at scale. We need to kind of do it the way that we're doing the African Continental Free Trade Agreement. And that's why I like the initiative that the Association of Stock Exchanges have embarked on. I know they have support from the African Development Bank. I think we just need to get going with it and do it. The other thing to do is basically think about planning together. So the European Union, has a capital market master plan. Nigeria in my own time did its first capital market master plan, and this year is the end of that 10-year period, and they're doing
Mm.
another one. What about a continent-wide master plan? Um, and when you look at the markets are so diverse. I think we have about 31 stock exchanges. You've got the Johannesburg Stock Exchange, which is operating at a level that is much higher than everybody else, and some of it is you can find in the data. So the market cap of all the companies listed on the Johannesburg Stock Exchange is about 200%, give or
Mhm.
take, of GDP. Nigeria is 22% of GDP, which means that we need to have many more companies listed on the Nigerian Stock Exchange. The average for Africa is 57%. For the more developed markets, it's at least 100%. So there is more to do. And that
Mm.
integration, starting with systems, starting with rules and regulations would help. I mean, part of what works for the Francophone West Africa is that they have the OHADA laws. They have rules that are harmonized. I actually think that it's much easier for the capital markets to integrate than it is for us to achieve the African Continental Free Trade Agreement. So it's, maybe it's my call to action to, to the policymakers and the regulators to see that happen, and to move from talk to actually taking, real action.
Excellent. Let me take some questions from our participants, and I have one from Tunde Arogumati, and he says, big ups to an awesome masterclass from a trusted professional. And his question is there a role for civil society to bring African capital markets up to speed at the requisite economies of scale on a sustainable basis? So what role could the civil society organizations play in achieving this thing that we've been talking about?
Wow. Thank you for your kind words, sir. Never had this question before. Phenomenal question. So one of the areas that I touched on at the beginning of our conversation, Patrick, was the issue around financial literacy. I think that civil society can play a role in that regard because they have a footprint all across the continent. And if we had financially capable, educated, and capable citizens, I think the continent will be in a different place. So maybe leveraging the network of civil society to try and
Yeah.
see that happen. In some countries, there's a whole financial capability and financial literacy agenda. Maybe having an Africa-wide financial literacy agenda is something to think about. One, because you can deliver a lot electronically,
Mm-hmm.
online, and leverage technology. One of the things for me that I would like to see is to see financial literacy be part of the core curriculum in primary schools, in secondary schools. Because as I said, life is about managing, I'm not trying to diminish life, about managing money. Everybody has to manage money in some way or the other, even
Yeah.
if you're a nun. you have to deal with money. So teaching people those skills gives them comfort. And so maybe that's, one role for CSOs. The other is just, and I don't know whether it's CSOs that do this or others, but I think monitoring and evaluation is
Mm,
something that will help us on the continent. So one of the things that would be, I mean, people rank stock markets by indices such as, the size of the market, versus the GDP and all that. But maybe there's some other indicators like the level of
mm.
trust, how easy it is to, to invest, how easy it is to get your money back. Maybe that sort of thing, collecting that kind of data so that people can truly see what's going on, may be another role for CSOs. But advocacy is
Yeah.
extremely important as to the understanding of finance.
And, if we do get the CSOs to play this M&E role, I'd like to see a measure on how capital market activities actually translate to development, in an economy. That would be something fantastic to see. But we have another question from Jude Anyibo. He says, it's an uphill task for micro, small, and medium-scale enterprises to access funds from the capital markets. What's your advice to the regulators for creating fairly achievable guidelines to enable these MSMEs tap into the huge opportunities in the market?
A very important question as well. So, what a number of the markets have been doing on some of the exchanges, encouraged by their regulators and the government, is to set up a secondary exchange where the rules are not as I don't want to use the word tough because that's not the right word. So if you're an existing business, some of the listing rules require you to have 5 years of, your financial statements, while
Mm-hmm.
an SME may not have that. So some of them have alternative exchanges that the rules are not as stringent to allow small and medium scale enterprises to be able to participate in the market. And in many of those cases, they actually provide business support services. So what they do hand in hand is hold your hand to be able to work that journey of listing, preparing to list. Because, of course, um, issues around going to a public market are things of trust. So they have to make sure that the books are in order, that you can present, present a business that a third party can look at in an independent manner. So some exchanges have put in place the business support services to prepare and support SMEs to go that journey. So it's advocacy so people understand what it takes. And, Patrick, earlier in our conversation, we talked about the fact that some people don't even want to sit control. I'm like, I don't even know what they don't want to sit control on. But after you get past that conversation, there are a number of exchanges, and Nigeria is one of them, that has provided a secondary, I forgot what the name is in Nigeria, a secondary market that focuses on smaller entities, and the listing requirements are not as stringent, and they then provide you business support services. And that's available in, I think Kenya has a similar one, the Nairobi Stock Exchange, and a few others have that. The UK has one, but what they call the alternative market is already quite big for some of our entities. Yeah.
Thank you. And I knew that a question on CFTA is going to come up in this conversation. And Fanan Bien says, thank you for the conversation. You noted there's a better chance for capital market integration than for AFTA. How can this integration help advance AFCFTA's goals, especially in financing cross-border trade and industrial development?
Well, first of all, I think that there are a number of things that will make FCFTA work. I think one of them is, in my view, physical infrastructure, even if we're not paying as much attention to it. I mean, you can get around Europe by train. very easily. You can't go from I don't even think you can go
anywhere to anywhere.
from Dakar
Yeah.
to
Anywhere
Gambia,
to anywhere.
by rail or whatever. So
Yeah.
physical infrastructure is one. The second is what I said about just harmonizing the rules, and then the other is, that's where talk has really been cheap. This idea of visa-free movement, and as everybody says, people from outside of the continent can get to different countries more easily than people within the continent. So those basic things need to be sorted. On your question around what is the role that an integration of the capital markets can play, important role. I mean, if a company can list in several markets, that's already bringing in integration. If the market participants can provide liquidity of a stock that's listed in various markets, that already provides some form of integration. But maybe it's also a good chance for me to make a plug for a board that I sit on. I sit on the board of the Pan-African Payment and Settlement Systems Initiative that the Afrexim Bank set up in 2021 to help cross-border transactions. And one of the goals is to basically eliminate the $5 billion equivalent that people who are doing business across currencies in Africa basically are paying in terms of transaction fees. So today, if you want to go from Ghana cedis to Kenyan shillings, in general, you would normally have to cross through dollars. And part of what the African currency marketplace that the PAPS has put in place is doing is for you to do a direct cross between cedis and Kenyan shillings. And with other currencies, Naira and Kenyan shillings and the rest of them. That I think is very significant in making trades more efficient, in creating a true marketplace that's continent-wide. So there are a number of initiatives that are going on, to try and, make AFTA come to life. But I think we should not understate the fact that this is a significant development. While other regions are looking for ways to go their separate ways, Africa is going the other way. And I think Africa is an example for the world. And credit, goes to, the architects of AFTA and the leaders who have made this possible. What we need to do is continue to build on that momentum so that the small fragmented markets can become one whole market.
And in these payment settlements, how are you guys thinking about digital currencies that's becoming a thing globally and also within Africa? How is that going to fit into the suite of solutions?
So one of the things that differentiates PAPS is it's the technology base. And yes, we've been thinking about digital currencies because the countries are thinking about digital currencies as well. And
Exactly.
what we want to do is provide a platform that is, if I can say, interoperable, so that whatever you're using means that you can cross very easily. I think that digital currencies will make it easier. I think that central banks are not moving as quickly as they thought they would around the world on digital currency. But our platform provides the opportunity to even integrate faster if digital currencies are in place. You know that there are a number of countries in the continent that announce digital currency initiatives, and we're not hearing as much about them
Including
as
Nigeria.
in the past. Yes, yes, yes. But the platform is ready and available to provide support.
Yeah. So I have a question from Princess Idoko. She's interning with us at Nextier. And she said, you spoke about credibility being a core currency in financial markets. or trust, that's the word you use. How can African regulators and institutions build up their credibility quickly, especially within this environment where political will is mostly inconsistent and sometimes lacking?
Wow, that's a princess question. No, that's no, it's a very important question, and I think that um, in my time, the regulators really paid attention to this issue. We felt that we were coming from a place where the bias is that, oh, we would not do things right. So I think we were much more stringent than other regulators around the world. And that allowed us to restore confidence very quickly. Um, um, our enforcement regime was much tougher than the enforcement regime in most other parts of the world. And I give this example to say that you have to do the work. I mean, if you want to show trust, you have to truly show that the cost of, doing wrong is high, and that nobody's, I don't know, is it no ox is God? It
Yeah,
doesn't
no
matter
one
who
does
you
is God.
are.
Yeah, yeah.
Yes, and I would say that, not just the SEC, the central bank at the time, all of the regulators did their bit in
Mm-hmm.
Nigeria at the time, post financial crisis, to show that we were really ready, to show that, Nigeria was serious. And, we got, as a result, the Nigerian equities entered the MSCI Frontier Index, our bonds entered the JP Morgan Government Bond Index. So people respond. By the way, that's what I like about the capital markets. People respond with their feet. If you're doing the right thing,
Yeah.
they'll be there. If you're not doing the right thing, they'll leave.
Yeah,
Type thing. So the short answer to your question, Princess, is that it's through actions and consistency of action. I think one of the challenges we have in Africa is, the fact that there's policy inconsistency, sometimes there's regulatory inconsistency, and enforcement is hard. Enforcement is hard when there's rent seeking. White collar crime is much easier, to get away with, because usually the politicians are connected to those who are committing white collar crime. So you just have to have leaders who are prepared to do what is necessary. I mean, I was prepared to die if that's what it took. And
yeah.
I remember the national security advisor saying to me, in my time, I think there are people who are out to kill you. I'm like, "Ah, at least I will die for something, type thing." So you have to have the attitude that, building trust is very critical, but you also need a system. It's very hard to be doing it alone. So if you have a
Yeah,
whole system that wants to be honest, that wants to do the right thing, and it's easy to lose credibility in one day. It takes time to build credibility.
exactly. Exactly. I have a question from engineer Chris Okoye, and he says, I worry about the judiciary. Having been involved in protracted litigation that took years to settle what seemed a straightforward disagreement, is there some value to improving judicial efficiency and trust in the cap and in raising trust in the capital market? His last question is, does alternative dispute resolution offer a long-term solution?
Mhm. So he's given the answer. I was going to talk about alternative dispute resolution. And SEC, in my time, supported having the alternative dispute resolution mechanisms, because the nature of disputes in markets mean that there are quite a lot of them. There may be, somebody, says, I didn't receive my shares in time. Those kinds of things can be dealt with through the alternative dispute mechanism. So one way is to reduce what goes to courts to the ones that are really significant disputes that need the judiciary. The
Exactly.
second way is what the Nigerian SEC led, which is to have a specialized court, the Investment and Securities Tribunal, Um, and the Investment and Securities Tribunal is the first court of so if you have a case related to investments or securities, you go to the Investment and Securities
Okay.
Tribunal,
Yeah.
and they're required to complete the case in 90 days. So that's another thing that's significant. Unfortunately, what has happened, with very smart lawyers who are misusing being smart, is that what they do is that there is a technical issue and a technical issue. So you finish the 90 days, and then there's another technical issue and all of that. But at least there's a specialized court in Nigeria. And I think every jurisdiction should have a specialized court that treats issues related to investment and securities tribunal. But fundamentally, you need a judiciary that's honest. You need a judiciary that is, what we're all, expect that, is it the judiciary? Is it the court is the last port of call
Resort.
for, yes, before.
Yeah.
So ultimately, you need that.
Yeah. Yeah.
You also need to educate the judiciary. So one of the things that SEC has always had a series of programs for journalists, for judiciary, for the legislators, for students, because the more that people are aware of the market, the better they're able to administer whatever they're supposed to do.
And a follow-on question from Engineer Chris Okoye. He says, what are your thoughts about the sustainability of subnational sovereign wealth funds? So take a region like the Southeast, having a Southeast sovereign wealth fund. Well, it can be called a sovereign wealth fund because the Southeast is not sovereign, but you get the point. And how do we build trust into that process?
I don't know what the rules of Nigeria are around what you can do at the subnational level. So my comments will be more general as to the importance of having an opportunity to save for future generations. So in the US, Alaska, one of the most well-respected sovereign wealth funds is the Alaska Fund. And the US permits Alaska to have that. So there are so many benefits to saving for future generations. You build products, you build tenure, you build markets that I don't see any reason why you shouldn't have by local government, by state, by region, by whatever.
I
The
think
challenge with a country like Nigeria is that things get politicized. And so,
too political. Yeah.
yes. And if you remember, that it was a hard fight to
Correct.
get the state governments
Yep.
to accept for the Sovereign Wealth Fund of Nigeria to be set up.
Exactly.
And that's why it was set up with a very small amount of money. It was only, I think, initially the contribution of the federal government.
The federal government.
Yes, from the excess crude account that was actually used because the states at the time refused to have that. Of course, that money is grown significantly to the size that it is today. So the political economy in countries like Nigeria are quite challenging because there's also the greater trust issues by ethnicity, by religion, by whatever. But if, for example, a local government or a state or a region takes some of its money and sets aside for future generations, there's nothing wrong with that.
Yeah, yeah.
But I'm not a lawyer, so I don't know whether there are legal implications of doing that.
I think the challenge with
I was going to say, I thought that he was going to ask me about, which people always ask me in Nigeria about state government bonds and what I thought about them. But if you want me to talk about them, I'll share with you. Sorry, you were going to say something.
No, I think that the challenge with the subnational is, getting them to agree on a development framework, and on the back of that, set aside monies, to invest for future generations. I think it's going to be a difficult sell. But anyways, we're here. We'll see how that works. Two questions from, and I've been trying to see how to combine them. One is from Ihan Iboko. He runs Center for Memories in Enugu. And the other is from Ehosa Imasue, who's a publisher. But they represent one of my core constituencies, which is the creatives. And their question is around with, from your experience with global financial institutions, what roadmap would you propose for building an enabling environment that allows cultural institutions like museums, to access long-term financing or endowment funding from the capital market? So that's on the one hand. And then on the other hand, how do we secure transactions in movable assets? So how do we see, or how do you see bonds and instruments like securitized earnings from future royalties, developing within the continent?
Wow.
Yeah, a
So
lot
one of
there.
the no, it's impressive the questions, and a big shout out to Dr. Ehosa. You do such a great job in publishing. He's the publisher of the Nigerian edition of my book. My UK publishers kindly accepted for me to have a Nigerian edition. So thank you very much,
Fantastic. Fantastic.
Mr. Ehosa, and thank you to I forgot the name of the other person, but
Behind.
the Ihanya, the Center for
Memories.
yes, phenomenal organization. Well done for all that you do. But I wanted to say to both of you that I think you guys are finance people because you're already thinking about innovative finance. One of the challenges, and I didn't get to that, Patrick, in our conversation, is that we're not structuring transactions to think about um, the nature of Africa. So this idea that you can uh, do transactions on the back of cultural assets is a great one. We have a lot of very interesting cultural assets. Um, and there's no reason why we shouldn't structure transactions on the back of that or securitize future royalties. So what we need is market participants that are thinking very creatively. That's why I'm actually quite impressed that you as creatives are thinking about this. It's such I think somebody needs to take up the idea before people like me take it up and make money doing it. No, it's such a significant point. One of the things that we didn't talk about as well, Patrick, is I mean, I talk often about the wealth of Africa. 90% of platinum, is found in Africa. Um, 75% in by value of diamonds, 60% of cobalt, coltran, and I'm saying to myself, how is it that we cannot use these reserves as collateral to raise money for the
Exactly.
continent? How is it that people are talking about how, we have so much debt in the continent when we have so much wealth, which we can use as collateral or backing to be able to raise capital? So I'm hoping that some of the innovation around, how we do things now that, as I said, everyone is focused on themselves and God for us all, so as everybody else is looking internally to solve their internal challenges, and they need to, Africa needs to think about how it can also solve its challenges. And some of these ideas, starting with the cultural assets, starting with securitizing future royalty, are very, very interesting ones, as well as, doing deals on the back of, the wealth that we have that still needs to be dug up before we focus on value addition and beneficiation, which we need to do. We shouldn't be selling the raw materials abroad so that other people are getting the value of that raw material. And Augusta has been helping me because we're launching a report on the 28th of October at our conference on leadership that we've called the Reforming African Minerals to Prosper Africa, Ramp Africa. So watch that space. We'll launch it on the 28th of October, and it'll be available electronically for people to read. But we
And the
really think
conference.
that it will be available at the conference, and it will be also be available. So the conference, if you go to www.ogtt.org, you can access registration for the conference. But we will launch the report and make the report available electronically to everybody via our website, because we do think that we need a minerals-led industrialization for Africa. You can't be so wealthy and so poor at the same time.
Exactly. And there's a question here on where folks can get the book in Nigeria. I wish Ehosa was on to answer that. And also when the Nigeria edition is coming out,
28th of October as well. So we're thanks to Ehosa, we're presenting the Nigerian edition on the 28th of October, and we're also presenting the Reforming African Minerals to Prosper Africa report at that same leadership conference on the 28th of October. And the book will not be available. You can always buy the book on Amazon. It's been available on Amazon. But I don't know. Augusta must have explained where it will be available in Nigeria. I think the large bookstores.
Yeah, I always take every opportunity to plug my friend's bookstore, Rovin Heights.
Oh, that's an amazing bookstore, by the way. So I'll join you in plugging
phenomenal.
them.
Yeah.
So, well, I hope that I hope that they'll go to Augusta to try and make sure that they have the books.
Exactly.
So one of the cases I made to the publisher here in the UK was that people just kept coming to me saying they needed, to have this book. So it's available via Amazon, but at least thanks to Narrative Landscape, Augusta and his team, you can also find it in Nigeria physically.
Let me get one more slightly technical, maybe even political question in as we, get closer to the end of that conversation. If you could wave a magic wand and change one thing, about how African capital markets operate, it could be policy, it could be institution, it could be some practice, what would it be and why?
Wow. One only.
Let's start with one, but we can go to three. But so I'm looking for prioritization here. Yeah.
No, my issue is that we need to act at scale. There's no reason why the entire market cap of African listed companies is $1.6 trillion approximately. That's smaller than even some of the BRICS nations. So we need to get more companies listed on the exchanges. We need to make the case for how they can, the example I always give, before MTN listed, and I was prospecting to MTN, I said, if Nigerians own a piece of MTN, when somebody wants to do anything to the base station, they'll be holding to the base station. So we need to make the case for more listings, both because people can raise money, but also because we can encourage better governance of institutions if they're listed, because of the rigor of listing, of getting ratings, of getting accountants to look at your statements, of getting lawyers to give comfort letters. So that would be, one. The second is just, the small markets. It doesn't make sense. So that whole issue about integrating the markets is very significant. And for me, because you can do it electronically, people can trade wherever they are. That would be my second one. And my third one is financial literacy, because the first line of defense against anything is knowledge. And finance knowledge is, if you're running a small business, is valuable. If you're managing your pocket money as a student, is valuable. And if you want to start building wealth when you're 20, if you put away 10 Kenyan shillings or 10 Ghanaian cedis, you'll become really wealthy in the future. So teaching people about compounding, about the time value of money, about the discipline of delaying gratification today, for the future, is one that I would.
And it's a compelling story in your book, how you started at age 8. And it also ties back to a question I just saw Stanley Zebulon, sneaking in on how do we, that he's interested in hearing your thoughts on integrating capital market concepts into elementary education, but I think you've kind of addressed it already.
Yes. So I don't know if all of you remember learning about simple interest and compound interest.
Yeah.
So what we need to do is apply that to investing in stocks. So you
Yeah.
learn it in primary school, but nobody kind of tells you, but that's what it means.
Mm.
One of the things that SEC Nigeria has been very good with is trying to advocate for changing and improving the curriculum at the primary school level, at the secondary school level, because it has to start at that level. And so relevant education is something that I talk about generally. Like we need to teach people entrepreneurship, we need to teach people, those skills. As I said, we all learn simple interest and compound interest, but nobody kind of connects it to investing. Yeah.
I don't want to kind of date myself, but I remember that when I was in secondary school,
Mhm.
first year in secondary school, I think it was Union Bank. I'm not sure. Came to school and signed up. Gave us all our account numbers.
Mhm.
And taught us how to save money. And instead of spending your lunch money, you can invest it and blah blah blah. I'm not sure I did any of that back then. I wish I did because I've lost the magic of compounding that could have happened in in the last 50 years, thereabouts. Yeah. But one thing that happened when we announced that I'm going to have this chat with you was we got a lot of females, a lot of women, ladies, just sign up to join. You're kind of a role model, for a lot of young ladies. If you could, in 30 seconds, articulate what you've learned in your career journey that could help a young woman who's starting out their career, who wants to play in those big offices, powerful offices, how to navigate. If you could articulate that, that would be very helpful.
I think that there is no discrimination against being the best. So always show up with the best version of yourself. Even when Patrick wants to speak with you after you've come off a flight, a long flight, and he has come off an overnight flight. So I hope this was valuable. So for me, the first and most important is be your best self. I always say that being your best self has no ethnic coloration, religious coloration, or gender coloration. Show up your best all the time
Yeah.
is what I would share. And then just there's learn be comfortable with things not going well and learn from it. I think I'm being stereotypical now. We women tend to be more risk averse. We want everything to be perfect before we do it. And by the way, there's research that says, I can't remember what the numbers are, but a man will be 50% prepared and will go, they're the best. They'll be 120%, and a woman will be 150% prepared, and they'll still be kind of like, oh, not quite sure. So
Yeah.
being confident after you've done the work. The
Mm.
third is for me that has been amazingly good for me is I have had so much support uh, from men and women alike. So learn from others. If there are people you like how they have led their lives in your company, in your community, on the internet. I mean, I've made some really good friends via LinkedIn. I'm not inviting many more LinkedIn likes because I have 560 that I'm yet to accept. And I try to accept as many as I can. But reach out to people who have done things that you like and learn from them or learn about them. Read voraciously. Pastor Mike Murdoch said, reading is like paying the author. If the cost of the book is $100, it means you paid the author $100 for at least 2 years of research. So read. You learn so much by reading, as widely as possible on the topics, that you're interested in learning about, but more generally on what's going on in the world. But be ambitious. There's nothing wrong with being ambitious. Be ambitious, reach for the skies and look for people who can help you get to the skies. So.
Dr. Arunma Oteh, thank you so much for this conversation, especially, because you just got off a flight and you still, honored us with this. And, thank you so much for your time.
I thoroughly enjoyed the conversation. I think because you knew I came off of a flight, you made it even more enjoyable, and you came off of a flight too. So that kind of made me feel okay. We're in the same boat. So I hope others enjoyed the conversation, and well done
Thank
all on all that you and your team at Nextier and Development Discuss do. Thank you.
Thank you. Thank you so much. And ladies and gentlemen, that's it for today's episode of Development Discourse. Big ideas, important questions, real conversations. Until next time, I'm Patrick Okigbo. Let's keep building the society we want to live in. Thank you.